Hello and welcome to the Learning Crypto YouTube channel. What a difference a weekend makes. On Friday, it looked like we were losing key levels of support and probably heading lower. However, after a weekend of bullish price action, it now looks like we are on the cusp of breaking all-time highs once again on Bitcoin. So in this video, I'm going to go through the levels we need to break in order to sustain this rally, and also go through the altcoins that we've been talking about over the last couple of weeks, showing you why buying the dip can be so effective in a bull market, and also breaking them down on the lower time frames to show you some potential trades that you can take on during the week, showing you the trigger confirmations that I personally am waiting for in order to jump on the trade. So let's get straight into it. On the Bitcoin weekly time frame, as you can see now, in last week's videos, I was talking about the fact that we had a significant weekly close over the previous all-time highs 2 weeks ago on the week beginning the 25th. Last week, I was talking about how it looked like we were going to lose that level of support. We were all the way down at 64.3k, and obviously the previous all-time highs was about 69k. But as you can see, we've rallied, managed to get a weekly close back above remain above that previous all-time high level. So it looks like 69k previous all-time highs is holding as support, which is a very positive sign indeed. Of course, bounced off that 236 weekly Fibonacci level at 65.5k as well. So it looks like a very strong trend indeed. If we go down to the daily time frames, so you'll remember me talking about this level here about sort of between 69k and 68.5k. And the fact that we had lost this level on Tuesday, the 2nd of April last week, and I said that was quite bearish in terms of the short term, especially when we came up, tested as resistance, and on Friday's video, I talked about the fact that it held as resistance and that we were rejecting it, potentially coming lower, potential weekly close below 65.5k coming, which could then lead to a drop down to 60.5k, maybe retesting this level at 63k first, having a little bounce and then dropping down there. However, as I say, which the rally started pretty much Friday afternoon in the US session, we zipped up, and then Saturday, Sunday broke back above this 68.5k, 69k level. And as you can see, today's candle looking pretty bullish indeed. Slight pullback so far on the US session, but nothing too crazy. So the levels we need to look at now, get rid of this level down here, unless of course we break back below it, and this 68.5k. So in terms of the daily time frame, this level here at 71.3k, which is the top or the swing high of the 26th, 27th, 28th, and 31st of March, and the top here on the 1st of April. So daily close above that, which will also mean a daily close above this bearish trend line, as you can see, and we are all systems go, I believe, for a new all-time high. However, we have got the US session to go. So far, a bit of a pullback. We'll see where this daily candle closes below this daily level at 71.3. Fairly worrisome. A daily close below this bearish trend line, and I think that is a cause for concern indeed. However, as I say, looking good so far. So let's move on to Ethereum. Again, higher time frames. Let's start on the weekly. Now, this weekly level, I should say, at 3551, which was the swing high back here in April, hasn't really acted as much of a support or resistance. So I'm going to get rid of that. You can see the candles just chopping in above and below it. So I'm getting rid of that and just focus on this 236 level we've got on the Fibonacci here, which is about 3500. And as you can see, holding pretty well as support on the weekly time frame. Again, didn't get as low as I thought. I thought we may be retesting the 382 last week and coming down to 3063. If we go to the daily, again, I talked about this level being lost as support at 3530, being quite bearish, but we held these lows down here at 3250. I was talking about potentially losing that level and coming down to 3050, but we bounced, and as you can see, rallying up to this level here. So the level we've got to look out for now that you can see we're currently rejecting off is 3645, give or take. So it's the swing high from back here on the 18th of March, resistance all the way through the end of March. So again, similar to Bitcoin, 25th, 26th, 27th, 28th and 31st of March, and the top of the April 1st candle as well. So daily close above that, and I think ETH can rally back up to the highs of 4.1k. Reject that, then of course this level needs to hold a support at 3534. If we lose that, then back down to the lows and back down to that weekly level of 3063. So again, we'll see how the rest of the day plays out. In terms of Bitcoin dominance and Ethereum BTC, we'll quickly take a look at those. So Bitcoin dominance, talking about, are we going to reject or break out of this level of resistance here, about 54%? If we break out, then I'm expecting around 57, 58% of Bitcoin dominance. However, if we reject, then that is obviously going to be very good for altcoins. And if we take a look at ETH BTC, again, I talked about this last week. It looks as though we may be looking to break down from this monthly range low. However, so far we have zipped up a bit. As you can see, ETH outperforming BTC today. So I'm wondering whether this dip below the monthly range low is a bit of a bear trap. You can see we've not broken below the lows from back in January. So we may see a bit of a rally here on ETH BTC. And if we do, if we break this monthly bearish trend line, if we go down to the weekly, then that could be very bullish indeed for ETH and altcoins. So something to keep an eye on there as the week and month progresses. Let's move on then to the altcoins that we were talking about over the last couple of weeks. So I've basically been using these 5 altcoins as a bit of a proxy on how to approach the altcoin market. So I've been talking about dollar cost averaging using the Fibonacci retracement tool. So essentially grabbing the fib from the January lows up to the local highs of around March time. Again, most alts will be the same. Sticking your fib on and basically dollar cost averaging into each Fibonacci level down to the 786. Either spot or very, very low leverage, which is a profitable strategy in a bull market. Of course, not financial advice. Do your own research and come up with your own strategies which will suit your lifestyle, etc. But as I say, very good for a bull market because you're not going to be buying the dip that keeps on dipping like what happens in a bear market. You are eventually going to get that reversal. And of course, the point of this is that your dollar cost averaging in because you're not trying to pinpoint the bottom because we don't know where the bottom could be. And at any point, things can turn around like we've just seen today. You know, it looked very bearish on Friday and now everything is bouncing. So as you can see, as I talked about on Friday, 88 coming down to this 618 level and having a nice little bounce. It's a pretty decent level of weekly support as well. You can see these weekly candle tops, closes and bottoms as well. So decent level of support. Are we going to get that final leg down to the 786? We'll have to wait and see. And that's why I talk about dollar cost averaging in at each level because you never know whether if you were just pinning all your hopes on getting that 786, it might not happen. So as you can see, 88 looking pretty good here for a swing long. If we break it down to the daily time frames, this is what I'm looking at for a shorter term long. So maybe a bit of a day trade or a shorter term swing trade. So I'd be looking at a daily candle close above 61 cents. You can see it was this start of the leg of the move back here from the 23rd of March. Daily close above that, that is then my invalidation. A daily close back below that, and I would cut the trade. But I'd be looking for a long up to this next day level of 67 cents, the start of this leg of the move down here, and then potentially a second TP up here at 78 cents, which is the local highs. So as I say, invalidation would be a daily close back below. That's how I'd approach that trade. Moving on to BNB, go to the weekly time frame. And again, this is why I say it's good to have a dollar cost averaging strategy on each level of the Fibonacci, because as you can see, BNB has only reached the 382 as opposed to ADA, which has hit the 618. So you don't know where the bottom's going to be. A little dollar cost average on each level and you'll get a decent entry, which you are expecting in a bull market to eventually go higher. So BNB, really, really strong trend, as you can see, holding the 236 last week after a little dip. If we go to the daily, again, the way I would trade this on a daily time frame is I would look for a daily close above 607, which was the swing high from the 1st of April. First TP would be up here at 645, which is the local highs set on the 16th of March. And then for a TP2, I'd simply get my fib, go from the swing high to the swing low and find the 1.618, which comes in around $735, $736. So that would be how I would approach that trade. Again, daily close above this for the entry, 607, and then a daily close back below would be my invalidation. I'd jump out the trade. DOT, weekly time frame. So as you can see, not a favorable weekly close in terms of breaking below this weekly level of support here at call it around $8.99 or $9, give or take. But we have bounced off the 618. So again, as I said on Friday, if you had an order there sitting on the 618, that should have triggered and filled, and you can see that's a pretty nice bounce from there. Currently up almost 10%, which is nice. So a weekly candle close back above $9, and that looks very good indeed, especially having just hit the 618. If we go down to the daily, this is how I would approach a daily time frame trade on DOT. So wait for a daily candle close above $8.85. Then hopefully, depending on how far it goes, either market enter or wait for a pullback to this daily level. And then TPs are the daily levels that you can see above. So the first one will be here at $9.74, start of this swing or this leg of the move, I should say, from the 1st of April. And then you've got another level up here at $10.45, which is the start of that leg of the move. And then finally, the top here at $11.70. So the swing highs from back in 14th and 15th of March. So again, depending on whether it's gone too far or not, maybe get a pullback or maybe market enter. $8.85 and break below that on a daily candle close would be invalidation. NIA, let's go to the weekly again. So you can see the strength of NIA compared to the likes of ADA and DOT. It's only hit the 0.382, didn't come down to that weekly level of $5.76, which was the 0.5 on the fib, which I talked about on Friday. And as you can see, pretty strong bounce from last Wednesday to today. But on the daily time frame, this is how I would approach a trade. So again, daily close back above this level of $7.37 would be my entry, and then also my invalidation. A daily close back below, I would jump out. First TP would be up here at $8.24, start of this leg of the move from the 18th of March. And then TP2 would be the local highs here at $9, which was the swing high from back here on the 15th of March. And then finally, Rose. Let's go to the higher time frames. You can see a nice, lovely bounce off the 618, similar to what we saw on DOT. As you can see, wick all the way down to $11.70, and we're now up at $13.45. So that is quite a nice rally. From there, 14% up from there and about 7% up from the 618. So nice little entry on that. If we go down to the daily, again, this is how I would approach a trade on Rose. So a little bit higher than the rest of the altcoins, but I would wait for a daily close back above $13.80 to be my entry, which would then be my invalidation. A daily close back below and I'd jump out the trade. TP1 would be up here at this level of resistance at $15.28. So the start of this leg of the move here from the 26th of March. And then finally TP2, the top of this current rally. So $18.15, give or take. Start of this leg of the move would be TP2. And you can see the risk reward on that is pretty good. So that's what I'm looking at the moment. Let's see how this daily candle closes. And then, of course, how the rest of the week goes. I'll be back with you on Friday for another video and an update on what's going on. So have a good week, and I'll catch you on the next one.